Now to Red Lobster. It has officially filed for bankruptcy.
Like Red Lobster needs to sell a lot more of those Cheddar Bay Biscuits. According to Bloomberg, the company is now considering filing for Chapter 11 bankruptcy.
An all-you-can-eat shrimp deal at Red Lobster may have left the seafood chain in jeopardy of bankruptcy, or at least in part.
The shocking truth about Red Lobster's business practices during bankruptcy. Red Lobster declaring bankruptcy came as a surprise to many.
Restaurant chain Red Lobster has officially filed for bankruptcy.
America's largest seafood restaurant chain, Red Lobster, is in a serious financial pinch and filing for bankruptcy protection.
It's a company that started in the late 1960s and has been incredibly successful for over 50 years. But in recent years, the company has changed hands several times, leading it to the brink of disaster. Now, its future is uncertain. So how did this beloved seafood chain end up in such a mess? And what's next for Red Lobster? The humble beginnings. In 1968, in Lakeland, Florida, two colleagues, Charlie Woodsby and Bill Darden, opened a small seafood restaurant called Red Lobster. They wanted to bring the coastal seafood culture of Florida inland. Inspired by a restaurant in Orlando, they spent about $330,000, around $2.9 million today, to build their new eatery, which could seat 250 people. With its nautical theme and a beautiful lake view, it quickly became popular. In just 2 years, they expanded to 5 locations across Florida. Their success caught the attention of General Mills, a large company that wanted to enter the restaurant business. In 1970, General Mills bought the controlling shares of Red Lobster for an undisclosed amount, making Woodsby and Darden employees of the new parent company. Rapid expansion. Under General Mills, Red Lobster expanded rapidly. In just 5 years, they built over 145 new restaurants in 23 states. By 1977, they had served over 54 million customers. The company continued to grow, opening new locations and introducing successful promotions like endless crab legs, making seafood affordable and accessible across the U.S. Red Lobster became a huge hit, bringing in great sales and leading to even more growth. In 1980 alone, the brand earned over $525 million, with each restaurant making about $1.9 million in sales. Red Lobster's success continued, and by 1988, they had over 400 locations and surpassed $1 billion in revenue. The peak of success. The early 90s were a golden era for Red Lobster. They kept expanding and introducing popular promotions like Lobster Fest. They served over 100 million customers in 1990, and each location was approaching $3 million in sales. Their interiors were updated to look like quaint fishermen's restaurants, and they introduced the famous Cheddar Bay Biscuits, which became a huge hit. Red Lobster was so popular that city leaders in smaller towns hoped one would open in their area. By this time, the chain had grown to over 618 locations, and Red Lobster was a symbol of success in the casual dining industry. A major change. In the mid-90s, General Mills decided to spin off their restaurant business, creating Darden Restaurants, Inc., named after Red Lobster's founder, Bill Darden. Unfortunately, Bill Darden had passed away a year before the split. Darden Restaurants took over brands like Olive Garden and Red Lobster. However, the IPO wasn't as exciting as expected, and Red Lobster faced increased competition. Struggles begin. By the mid-90s, competition in the restaurant industry was fierce. Darden had to close several underperforming Red Lobster locations and warned investors that a turnaround would be slow. They refurbished restaurants, slowed expansion, and focused on introducing affordable menu items under $10. By the late 90s, things started to improve, and Red Lobster was once again seeing positive numbers. In the early 2000s, Red Lobster commanded a massive 46% market share in the casual seafood space, with over $2.2 billion in total sales. They introduced new items like quick catch lunches, which increased customer satisfaction. Endless Shrimp, introduced in 2004, became a staple promotion, drawing in crowds each year. A decline. Despite cautious expansion, Red Lobster plateaued. They had over 690 restaurants, but their parent company, Darden, began focusing more on Olive Garden, which was growing faster. In 2014, after several years of declining sales, Darden decided to sell Red Lobster to Golden Gate Capital, a private equity firm, for $2.1 billion. Golden Gate Capital moved Red Lobster's headquarters to Orlando and continued remodeling the chain. However, they needed quick cash and sold off Red Lobster's real estate assets, bringing in $1.5 billion. This sale and leaseback deal meant Red Lobster had to pay rent for its locations, increasing its financial burden. New challenges. Golden Gate Capital sold Red Lobster to Thai Union, a Thailand-based seafood supplier, in 2020. Thai Union had no experience running a restaurant company in America. They focused on cost-cutting, stretching staff obligations to the limit, cutting menu items, and reducing food quality while raising prices. The pandemic and rising food and labor costs hit Red Lobster hard. With shrinking margins and high rental payments, the company struggled to stay profitable. In 2022, Red Lobster lost $22 million, dragging down profits for Thai Union. Executives at Thai Union pushed to make endless shrimp a permanent menu item, hoping it would attract customers and use up their excess shrimp supply. However, it cost Red Lobster much more than anticipated, adding to their debt. Bankruptcy filing.
Red Lobster's ultimate endless shrimp promotion is now being at least partially blamed for its downfall. The restaurant chain filed for bankruptcy last Sunday.
By 2024, Red Lobster had lost $76 million overall. With rising debt and financial struggles, they filed for Chapter 11 bankruptcy on May 20th, 2024. They announced the closure of 99 locations and secured a $100 million to keep operations going, while they tried to renegotiate leases and reduce debt. What's next? Red Lobster's future is uncertain. Thai Union plans to divest their stake in the company by the end of 2024. A new CEO experienced in guiding companies out of bankruptcy has been hired, and a strategy focusing on efficiency, improving corporate culture, and providing better service is in place. Despite the challenges, Red Lobster remains a strong brand name in the casual dining industry. Its legacy spans 55 years, from a single location in Lakeland to a nationwide chain. The company's explosive growth under General Mills was remarkable, but private equity and poor management decisions have led to its current struggles. Conclusion. The story of Red Lobster is one of incredible success, followed by significant challenges. It started as a small seafood restaurant in Florida and grew into a beloved national chain. However, changes in ownership and management decisions have brought it to the brink of bankruptcy. Red Lobster's decline is a reminder of the complexities of running a large restaurant chain and the impact of financial decisions on a company's future. As they navigate bankruptcy, the hope is that new strategies and leadership can turn things around and restore Red Lobster to its former glory. If you enjoyed this story and want to support our channel, please subscribe, like, and comment to this channel. Uncovered Hub. See you.